Welcome back to another market live stream. We've got actually the unemployment data report coming out in about 9 minutes, but Secretary Gensler is on CNBC right now, and I want to listen into this. It's pretty important. Let's listen in here.
I think investor protection has helped economic growth. I think that investor protection has helped capital formation because it builds trust and confidence in our financial markets, and I think it lowers what's called the risk premium. It lowers the risk that somebody's defrauding the investors. Now, investors can take risk. That's at our core of our sort of public policy. Investors can take risk as long as they have that disclosure, all of those what's called material disclosures from an issuer, somebody raising money, somebody investing, and those disclosures be kept current, and they're updated, as we know, quarterly and annually and the like. That's how I think of it. I think about the exchanges where there's not that protection yet on the crypto exchanges, but on the exchanges to ensure that there's integrity and that if somebody says there's a bid or an offer, it's real. And then thinking about this market structure and these events around January's volatility, is it the most efficient market? Meaning, does it help lower the cost through a lot of competition? Competition and transparency is contrasted to darkness and concentration. So that's the balancing, but bring transparency and competition in markets. That's good for investors. That's good for issuers.
It's all about crypto right now.
This one's a little theoretical. The biggest issue for regulators trying to see things before they happen, and regulations often are only put in place after there's a crash, after there's a fiasco, after there's a situation where people lost a lot of money. It's just natural because there are so many lobbying organizations, so many blocks that are put up to try and keep the system status quo and as it is. But if you were looking out there, if there's one or two things that you're most concerned about, we did hear from the Fed yesterday that they're concerned about asset prices dropping really rapidly as they've gone up so quickly. If there's one or two areas that you're really concerned about, maybe.
Quick note, while she asked this question, Gensler's been talking about more regulation for crypto, more transparency for crypto exchanges, really wanting to make sure also that social media doesn't manipulate markets. Is that a hit on, Doge and Elon Musk? I don't know.
Easier user interfaces on our mobile apps, not just in finance. That's generally been a positive outcome. But to guard against that, we don't lull ourselves into a place that we're not protecting investors and we're not ensuring for that market integrity that I mentioned earlier. So I think it's good working with the staff and my fellow commissioners to get ahead of that. I also think disclosure, that we're in a new decade, and investors want to understand more information about climate risk and human capital and the drivers of value inside of the businesses and the drivers of risk inside of the businesses. So these are a number of the areas that we're going to be spending a fair amount of time with.
A lot of talk about disclosure regarding crypto as well, making sure that the companies who have crypto on their balance sheet, because he was asked, well, what if crypto's going to go to zero or are they going to go to moon? And he's like, oh, I'm not going to speculate on valuations, but disclosure at companies is really important. So not sure what kind of new regulation they might have for corporations holding crypto, but that could certainly hold some companies back from wanting to get crypto if they don't know what's going to be required yet.
I'm sure that they've got enough media consultants to advise them.
Chair Gensler, we appreciate you being with us, and we look forward to seeing you in person very, very soon.
All right, thank you, Andrew, Becky, and Joe.
You bet.
All right. There are going to be some headlines coming out of this. Hold on, let's see.
April employment report. We've got our all-store jobs panel standing by.
Yeah, we're 4 minutes away from the April employment report. But this is I don't know. That's going to be interesting to see how the crypto markets react to what was just said here. You know, we had talk about just over the last 15 minutes, even before I started streaming, we had talk about more regulation coming to the crypto space, making sure that tokens are safe and that they're legit, and that's potentially a hit on you know, some of the altcoin sectors. Like, hey, how does the SEC know that these coins are regulated? That's also a little bit of a hit on is a token a security or is it a currency? And I think in many cases right now you could see an argument that a lot of tokens are indeed securities. That it's not just about being a currency. It's as Jerome Powell says, a way to speculate and make an investment. Not saying speculate in a negative tone here, but you know, I'm not really seeing any kind of move to the downside in Ethereum and Bitcoin on this talk here, but I am seeing Doge down. Doge down a little bit here on these Gensler comments here. You can kind of see Doge went down from about 62.5 when he started talking, 62.6, down to I mean, not what, 0.6. I mean, so it's you know, barely a movement. But let's see here. Nikola just reported. Nikola Q1 adjusted loss 14 cents versus 28 cents expected. But anyway, those are going to be interesting. People are going to be digesting Gensler's commentary here about crypto throughout the day. So we'll see what ends up happening with crypto regulation. But Gensler's definitely anti-market manipulation, pro-disclosure, and unwilling to comment on valuations. But it does seem like he's leaning towards crypto as being deemed securities rather than currencies, and that could definitely lead to a lot more regulation and oversight, especially of the crypto exchanges as well, is another thing that he wants more transparency in, as we heard. Okay, so we are now 2 minutes away from the unemployment data release. What I've got is I've got the 10-year Treasury up. We're going to have, obviously, you know, we've got CNBC up, we've got the news up, we've got the Labor Department up, so we can make sure we get this as soon as possible. And yeah, it's going to be exciting. What are we expecting? I don't know. We got 90 seconds. And really what's going to be interesting about this unemployment report is the last one brought us, this is sort of what the unemployment, this is sort of what the unemployment reports look like. And the last one, you could see that total non-farm payroll rose by 916,000 in March. Remember, now we're going to get the April report. And the unemployment rate edged down to 6%, which is great. Seeing things edge down, nudge down, that's good. You know, seeing the rate kind of move down at this pace is good. When things ironically get concerning is if we were to get a sudden plummet in the rate, so an acceleration of this rate to the downside. I would say plummet would be like 5.5% all of a sudden. You know, if we get like 5.9, 5.8, maybe even 5.7, like, okay, that's fine. That's not a big deal. That's kind of aligning with being at maybe 4.95% by the end of the year. Great. But if it looks like we're going to blow past 4.9% by the end of the year, and we're going to be like 4% by the end of the year, that's going to make people think that rates are going to go up sooner, and it's going to make folks a little bit more nervous. So that's going to be a little bit what we're looking for. Now, CNBC usually gets this information embargoed, so I'm going to have them live here within the next, well, let's just turn them on right now. Let's listen in, see if they get the info before we can find it ourselves.
Because services will bring down that average hourly earnings to about flat.
Rick, we'll get to you. I don't want to. Let's get to Steve because he's got the number. It's okay. Good.
Yeah,
1.08. Steve, the number.
Wow, it just came across. Give me a second here. We have
6.1
here.
It's up.
Just came
It's
across.
It actually went up.
Sorry about
Rick's
that. It
talking.
came across very quickly.
266,000 in
It looks like
April.
200
Unemployment little changed at 6.1%. Wow, that should actually drop yields. This is the opposite direction of what we expected. This would be a sign of the market not overheating the way people are concerned about.
It's a 6.1%. So we have some issues here.
266,000.
Long-term unemployed.
Big revision.
Yes, that's what I'm.
Last
Do you not
month,
hear me there?
770 versus 916. Yes. Minus 78,000 on the revision. If we look at manufacturing, change in private payrolls, it was only 218,000. Manufacturing minus 18,000. The unemployment rate went up to 6.1. Average hourly earnings rocketing up 0.7. Year over year up 0.3 on earnings. And average work week strong 35. And here we go, 61.7 on the labor force participation rate. And do remember, in January, prior to the pandemic hitting,
Folks, look at that 10-year treasury plummeting to 1.46%. This is not a bad thing. Ironically, this is not a bad thing. I see some folks in the comments saying this is bad. This is not bad. We want to know that the markets are stable, not overheating. Overheating is a concern. This is not a bad thing. This is actually, in my opinion, this is good. We don't want overheating. We want steady growth. We got a rise of 266,000 folks in April. I'm going to read this a little bit slower here so we can digest this a little bit better. We've got household survey data. Okay, let's see. Little change in April. The measures were down considerably from their recent highs in April 2020, but well above their prior levels from the COVID pandemic. Okay, great. Let's see here. Among major worker groups, the unemployment rate for adult men was 6.1%, adult women 5.6%, teenagers 12.3%. This is important as well here, right here. Look at this, folks. Whites 5.3%, blacks 9.7%, still almost double. Let me see if I can get the March report. I want to compare that really quick, because I want to see did employment rate, did the black unemployment actually go up? See, here it is. Asians, teenagers, blacks was 9.6. See, it went up. The black unemployment report actually went, unemployment portion actually went up, where whites went down. Whites went down from 5.4 to 5.3, and blacks went up from 9.6 to 9.7. And Hispanics went from, we're at 7.9. Now they're at 7.9 also, so stable here. Let's see, temporary layoffs at 2.1 million, changed little in April, but the measures now, okay, that's comparing year over year. In April, the number of persons jobless less than 5 weeks in increased by 200. Number of persons jobless increased. Wait. This is actually an increase of 237. Yeah. Actually, this is unemployment. Employment rose 266. Okay, got it. The number of persons jobless less than 5 weeks increased 237. Okay. I get it. Less than 5 weeks decline. Okay, let's see if we can. I just want to compare. Less than 5. Whatever. Hold on. I want to get some of the other info too. Let's see what else we have here. Okay, the number of long-term unemployed at 4.2 was essentially unchanged. Perfect. Labor force participation rate was little changed. This, by the way, is something else that the Fed wants to see going up. Is we've got 61.7% on labor force participation, and this is something that we want to see go up. It is 1.6 percentage points lower than where we were in February 2020. So another way of seeing, okay, is the market going to overheat, is seeing this number go to like 65%. All of a sudden, like everybody's working, Let's see what else we have here. The number of persons employed part-time for economic reasons decreased by 583,000 to 5.2 million in April. The decline reflected a drop in the number of people whose hours were cut and slack in the markets. Okay, good. So the number of people employed part-time decreased, which is good because you want people working full-time when at all possible. A number of people not in the labor force who currently want a job was 6.6 million, mostly unchanged. Okay. Not attached was 1.9 million, essentially unchanged. In April, 18.3% of employed persons teleworked. So 18.3% of people commuted, worked from home, down from 21% in the prior month. So this is also plummeting. Like people are going back to the office. People are going back to work. In April, 9.4 million people reported that they've been unable to work because their employer closed or lost their business through the pandemic. They did not. Okay. This measure is down from 11.4 in the prior month. This is good. So businesses are reopening. This is what we would expect. Okay. Non-farm payroll increased 266,000 following an increase of 770,000 in March. That's a revision down. And this is, so take a look at this. In the March report, they said that unemployment rose by 916,000, which was kind of like, that led to a lot of fear because the market's like, oh my gosh, like we're recovering really, really fast. We might be overheating. Here comes big time inflation. Well, they've actually gone back and revised the March number from 916,000 to 770,000. So that's a 150-ish thousand people revision down. And then the growth here in April was only 266. So I think everybody was really expecting this market to show a big time decrease in the unemployment rate, and the fact that the unemployment rate ticked up is something that is definitely removing a lot of inflationary pressures. Look at that plummet on the 10-year Treasury here. Now it is trying to recover a little bit right here. It did plummet to about 1.4. I'll remove myself for a second, just to make it a little easier. It did plummet here to about 1.48, 1.49 right over here. It is trying to recover a little bit right now, though it's kind of just bouncing around right here. See, they're back down right now. So you can really see bond prices basically going up, bond yields going down. Remember, folks, this is an inflation expectation chart. So when we look over the last, let's go to year to date here for a moment. When we look at actually, let's go 6 months. It's a little easier. This is the chart we usually use. Over the last 6 months, we can really see rates going up, high expectations of inflation, concerns over overheating. And lately, we've just been straight down with this. Well, maybe not straight down, but we've been trending down. And this unemployment report is certainly helping push that trend down. Let's finish looking at the unemployment report here, and then we'll look at the sticks as well. So leisure and hospitality unemployment increased 331. We've got services up 44. Services kind of lagging. Employment and local government education increasing 31K. Social assistance 23K. Financial activities 19K. So most of the recovery here in pandemic-related leisure, hospitality, like industries with issues. Transportation and warehousing. Employment actually fell here with couriers and messengers in April. We've got manufacturing edged down 18,000, retail trade down 15,000, healthcare down 4,000. Employment construction was unchanged. Average hourly earnings increased 21 cents to $30.17. Following a decline of 4 cents in the prior months. So this is good. You want to see people making more money? Average work week for all employees increased 0.1 hours. And this is a sign of people, again, working less part-time and more full-time. Change in non-farm payroll for February was actually revised up a little bit by 68,000, but relatively small. And this interview, I generally like seeing when they collected this data, and sometimes they tell us, but not always, when they collected it. No, they don't tell us here, because usually the April data is collected sometime in like mid-April, and that's why they make the revisions, because they still get new info from the end of the month. But let's go ahead and see briefly here how markets are responding to that. We already know we had our expectations for the 10-year Treasury. Again, my expectation was, we would see, if we saw some kind of like tick to like 5.9 or some kind of slow movement, we would see rates maybe stable or down a little bit. But the fact that the unemployment rate went up quickly led the markets, the bond yields to plummet. This is leading pre-market. Let's see what we got in pre-market here. Dow is looking like it's going to open down a tiny little bit, about 0.43 points to the downside. Let's see here the other ones quickly. So we've got regarding indices, we've got the NASDAQ up 1.42% in futures right now, S&P up a third, and the Dow approximately flat. But really, the tech sector is probably going to benefit the most off of this news today. But yeah, definitely a big surprise. Okay, Politico is just reporting that folks were actually projecting a potential 2 million increase in jobs. That makes this a huge miss if that's true. That we only got 266,000 jobs added on the net, but we were expecting maybe 2 million jobs added. That's definitely showing like, hey, don't think the economy is overheating as much as you think it is. All right. Well, let's look at some. Let's look at some of the sticks here. So what I want to look at specifically is I want to look at the pre-market, and I want to see how the pre-market reacted. Let's get it on the chart here. This came out at 8:30, so right around here. That's where I want to look. So when we look at these stocks, let's clean this up a little bit. Let's see here. Go away. All right, there. When we look at these charts, folks, what we really want to look for is how are stocks reacting, and this is gonna, I think, be very helpful for traders as well to maybe see what to expect going into the day. But take a look at this. You could see Roku bumped on this. It's up 10% here in the pre-market. GoPro didn't really move. Tilray is up, but didn't move too much. Cloudflare went up. Piton went up. Square shot up. I mean, Square skyrocketed on this unemployment news right here. Usually, I would expect that you're going to see the highest valued techs probably move the most. Yeah, look at Twilio. Twilio jumped on this. Yeah, Matterport jumped on this. It's the things that have been selling off. Ubiquity jumped. Roblox pretty stable. Airbnb had a jump on this. Nano Dimension had a jump on this. And this is just the beginning of the pre-market. We'll see how long a potential rally lasts. But you wonder if this would be something that could catalyze a rally in the market in some of the higher priced tech companies or consumer discretionaries. Wayfair ticked up. Blink charging. It's hard to see any kind of movement there. ChargePoint up a little. PayPal definitely moved up. So yeah, it's ironic, right? It's kind of like, oh, bad news is good news. That is the thing. Like, that's kind of why the stronger earnings are at companies, the more people are like, oh gosh, the markets are overheating. This is a sign that for sure there's inflation, and then we got the chip shortages, and so yeah, this is actually, these bad unemployment numbers are actually good for these tech companies, these higher valuation companies. That's actually going to be good for ARK. I wouldn't be surprised if ARK is up. Pinterest is up on this. We've got Apple up on this. We've got Tesla. Tesla moving up on this news. But it all has to do with inflation. This is literally a market that cares about inflation. And so when you hear that Apple is selling so many more iPads and they're crushing earnings, it's because of inflation expectations. It's that simple. And look at that. JP Morgan plummets. JP Morgan plummets on this news. Why? Because JP Morgan and banks benefit from higher rates. They make more money when rates go up. Like Kevin O'Leary said yesterday in his reaction to me, people want cash flowola or whatever it was he said. And cash flowola goes down with lower rates at banks. And so it's not a surprise you're seeing banks move down and tech move up on that news. Beyond just got spanked by earnings. I don't know that Beyond is really affected here much. So let's see what else we can see. Nordic American. Let's see how about recovery stocks. Yeah, Delta Airlines moved down on this news. That's interesting. American Airlines moved down, tried to recover a little bit on that news. But the airline's moving down on the unemployment news. Maybe meaning, are we reopening more slowly? Is that kind of what the market's feeling here? Let's see what else we have. Okay, let's just look at top news here. Okay, Treasury right now at 1.5 for the 10-year, well short of expectations. Let's grab the story on this. So this is being dubbed a huge miss by Wall Street. The recovery in the U.S. labor market is taking an unexpected pause. Non-farm payrolls increased by 266 in April from the prior month after a downwardly revision. Right, we already covered that. The unemployment rate inched higher. Bloomberg survey called for a gain of 1 million jobs. Political called for a gain of 2 million jobs. We only got a gain of 266 million. So definitely a big old missola. Let's see. U.S. jobs growth misses all estimates. Yeah, payrolls. Okay, we already know the data effect here. Yeah, see, this is like if we had another big chart here, like imagine if this was like 1.5 million, like imagine the reverse here. You would have seen inflation expectations skyrocket. What else we got here? Yeah, treasury yields plunged while inflation expectations spiraled downward and the dollar turned sharply lower. U.S. stock futures maintained gains. The S&P tech, or I'm sorry, the Nasdaq futures are up 1.4% here. Chair Jerome Powell said last week that a dichotomy likely reflects a combination of a skills gap, childcare obligations, and lingering virus fears. Job gains accelerated in leisure and hospitality. We saw that. And then we've also got a dearth of job candidates has led to some states to swing into action to alleviate the labor shortages of people willing to work. I do want to just briefly bounce back here because I also want to see what's going on in cryptos. So Ethereum and Bitcoin are actually doing very well right now. Bitcoin up a little bit here, ironically. Doge still down a tiny little fraction just in the last 30 minutes, sitting at 0.6, which isn't really down. But the crypto story is the other one that's big, and it's right here. This is going to be something else that crypto markets are going to really have to digest today. So let's see here. Wall Street overseer confirmed he won't back down from tough battles with the financial industry as he laid out an agenda for increased regulation in numerous contentious areas. Making his first appearance before Congress. La-di-la-di-la-di. Okay. He also vowed to look at rules for cryptocurrencies, corporate disclosures tied to climate risks, and derivatives that triggered the blowup in Archaeos Capital Management, the family office. Let's see what else. I'm very pleased with the House finance. Okay. What else? Let's see. Gensler, Archegos, crypto rules. Here we go. Former professor at MIT who taught a class on blockchain technology. That's very good, by the way, right? It's supportive. Was asked about his views on cryptocurrencies. Gensler said the market could benefit from greater investor protection. He urged Congress to work on legislation that gave the SEC oversight of crypto trading venues, which they don't have right now. Right now, crypto exchanges do not have a regulatory framework. So he wants the SEC to be fully involved in regulating these crypto exchanges, which might give us a little bit more of a look into leverage. You know, how stable are stable coins? How stable are these crypto brokerages? His comments may have cooled rallies for some of the hottest cryptocurrencies, with Dogecoin declining for the first time in 5 trading sessions. Yeah, it's at 0.6 right now, down a couple pennies, but not really. Yeah, I guess just pennies. Gensler said he's pushing the SEC to finish a report by summer on the GameStop mania. The review is likely to touch heavily on brokerages like Robinhood that have reshaped trading. Gensler acknowledged the agency may need to freshen up some of its regulations. However, keep in mind he did say on CNBC this morning that he's not so worried about user interfaces as he is like regulatory disclosure and preventing market manipulation, which is a sign that he's not so worried about Robinhood making it easier for you to trade, but that he's more worried about potentially manipulation in the space. Like, I don't know, I'm speculating here. Is he suddenly referring to or subtly referring to Elon's Twitter? Is he subtly referring to Wall Street bets? I don't know. Let's see. Okay. Also had fielded questions about Citadel and these other market makers. Big thing that he wants to see is more competition. So these are big updates here. Very big updates. I mean, we've got big unemployment updates. We've got big updates in the SEC regulatory space. So it'll be very interesting to see the overall reaction we get here and how this continues in the market. So obviously you see this edge higher. You see this consolidation so far at Square. Peloton's been up about 5.8%, so I don't see a big change there. Let's see CNBC for a moment.
thoughts on some of the things we heard from Gary Gensler for the first time?
Well, look, I just want to go with the Gary Gensler comments for a second. Where one of the things that Joe was asking, I don't find anyone saying, other than the people in Britain, look, this is all fraud. And it's got to be put down. We can't do this crypto anymore. It's just a big joke and it's a big mistake. And Gary, correctly, I taught it at MIT, but I keep waiting for someone in government, even if you don't think it is a big joke, to say, you know what, there are differences between the different currencies, and some have store of value and others are a joke, and we're going to crack down on the jokes. But no one seems to want to do that. On the employment number, I found myself agreeing with Rick in a lot of ways, simply because as someone who's has many jobs that are open at my little companies, I struggle about why I have the help wanted. And I keep coming back to maybe the unemployment benefits are just better than what I can offer, even though I've raised my wages substantially from before the pandemic. And I don't know. I mean, I'm not saying, I don't want it to be ideological. I don't want people to say, you know what, Kramer's rich and I can't believe he's worried about how much he's paying people. It's the opposite. I need to find them. And we're all having trouble finding them. And when I say we're all, because I check them at a lot of restaurants, because I don't want to be sure it's my own problem. So, Andrew, I mean, I just think it, both anecdotally and now empirically, we're all trying to find those workers. So we have to try to figure out what is the problem. And I also think that
I'm going to pull down here just for a moment. Headline just came through here. Fed hike bets paired. Euro dollars price first full rate hike mid 2023. So this is actually a big movement back. Betting markets, basically, futures markets, we're expecting the Fed to raise interest rates at the end of 2022. And that has now been pushed back to mid 2023 because of this unemployment report. That's a big move. Big move.
Spot on. It is the issue, and I've heard it from other employers, and hearing it from you firsthand. It's fascinating, and it's a challenge.
Can't find them. And wages up huge. I mean, I'm talking about 30% increase. I mean, I'll take them to 40. It doesn't seem to matter. I can't find them. Wow.
We'll do a little work this weekend. Maybe I can try to help along
Great
the way.
show, you guys.
If you want a job with Jim, by the way, you know how to find one now. So there.
I'll take you. I'll give you a shift.
Have a great weekend, Jim. We'll see you in just a couple of minutes. And of course, happy Mother's Day to everybody in the Squawk on the Street family. Squawk returns right after this.
Yeah, somebody here says, Dave Unbranded, the whole purpose of crypto is decentralized. We don't want government in it. Yeah, the problem, though, is as much as we might kick and scream and say we don't want government involved, I think there's a very, very, very strong case that cryptocurrencies are actually crypto securities, that really what we're doing is we are investing into assets that we believe will go up in value over time. I mean, there's nobody who's investing in Bitcoin because it's, in my opinion, it's so much freaking easier to go buy coffee because it's just not. It's easier to use your crappy fiat if you got $5 in your pocket. It's easier to use your Apple Pay on your credit card. That's the bottom line right now. It's easier to transact with fiat in many cases. People are investing in cryptos for speculation on value, but then also store value for certainly foreign countries who have much less stable monetary regimes. And those, investing in something for a store of value and for it to go up in value, generally, that's a security. People put money in, for example, when you had hyperinflation, and consider this, when you had hyperinflation in Zimbabwe, people actually plowed money into the Zimbabwean stock market because people would rather own shares of a business than they would the currency. If people are investing into tokens because they'd rather hold that than the fiat, then much like shares of a company, these are probably crypto securities and not cryptocurrencies. So if these are actually crypto securities, the SEC is going to be all over this because the SEC doesn't want some scam coin going viral, which I'm sure there are many of and people losing a bunch of money in pump and dumps. And that is where that is the SEC's responsibility, whether we like it or not. They will step into that role and fulfill that role. I don't think that's really a risk factor at all for Ethereum and Bitcoin. And if I had to speculate, one of the reasons Ethereum and Bitcoin are actually showing a little bit of a tick up right now is because the ones who should be concerned are altcoins, not these guys. See, you've got a tick up over here on Ethereum. You're at almost 35 here. You've got a tick up on Bitcoin, actually. Look at that. Right after the unemployment numbers, which is very, very weird given how treasury yields have fallen. Let's listen to this for a moment.
Forecasters had been looking for. Lori Heinel is State Street Global Advisors Global Chief Investment Officer, and she joins us right now. And Lori, looking at some of these moves, yield on the 10-year came down. You saw the Dow futures come down and turn negative. You saw the NASDAQ futures take off.
Yeah, Jeremy, we talked about exactly this here. Why is it U.S. adds far fewer jobs than expected? Big miss, good news. It's good news because everything is related to inflation expectations. Why is it that Apple goes down when they smash earnings? Because it's a sign that the economy is booming. Things are maybe overheating and that inflation expectations are likely to go higher. The better tech has been doing, the lower they've been going because of people's inflation expectations. This miss on the unemployment report plummeted inflation expectations. Now we are seeing the 10-year Treasury recover a bit. It did fall to 1.49 on the 10-year. It is now back to 1.53, which is still lower than where we were earlier, right around 1.58. So we're still down somewhere around that that 500-ish points. Basically down from 1.58 to 1.53. But let's keep listening in here.
Being in a pro-cyclical phase, we do think that recovery is intact, and that's going to provide support for that reflationary trade. But clearly, people are very skittish right now. I mean, the market has run pretty dramatically in the first part of the year, so it's not surprising to see some folks perhaps take a little bit of profit taking here, take a little bit of a breather here. But we've thought all along that this was really a 2-year story, not a sprint.
Yeah, I do think it's possible that you could see some shorts start to unwind after this news. Yes. And then that makes you wonder, is this going to be a start of a potential rally? I don't know. I'm too skeptical to buy in pre-market, but those are things, I would watch for that.
Europe and other places for maybe potentially better growth?
We are. And again, the U.S. has been the bright spot in a lot of ways, certainly through the pandemic and in the early part of the recovery. And what we've been looking for are catalysts for other parts of the world to start to be attractive. And certainly from a valuation perspective, Europe is relatively more attractive. But because of the overhang.
According to the stock market, what's the script basically for society to open? Well, what we want is sustained growth that is not overheating. Well, because here's the thing, what you don't want is so much growth so fast that the supply shortages we have worsen, that things get more challenging. That's the last thing you want, is things to be more challenging in the market. You want them to be less challenging. You want the market to be, okay, we're growing, we're adding workers, we're adding capacity, we're adding to supply. We've got more cars we're manufacturing, but, we have that capacity. We want that sustained growth. Like a V is actually very, very like bad for the market. It's kind of like I think like G forces in a fighter pilot plane. Like you go straight up so fast, you get kind of the and it's like you're going unconscious or whatever because the markets can't keep up. That's not what you want. You want the nice, slow and steady, 747 kind of takeoff. That's what you want to see. Anything that deviates from 747 takeoff in the market is something that's like, whoa, inflation. And so that's that's why you get this kind of pain. Buy the dip on Etsy, I just saw. Yes, please. All right, so let's take a look here. I mean, this is big. Let's see. All right, okay. Perfect. So yeah, I'm watching this 10-year here, Bob around 1.53 right now. Again, the lower the 10-year sits right now, the better it will be for markets. Let's take a quick look here at markets again here. Looks like we're pretty stable right now in terms of how the market is behaving. We're seeing that increase, but we're kind of maybe slowly seeing a little bit of these red candlesticks start baking in after the big jumps, but only minor pieces here. So I think really the next 30 minutes of pre-market, I don't know that they're going to tell us too terribly much. I think the big moment is going to be when this market actually opens. That's where we're going to get a big tell to see, okay, are we going to see, shorts closing some of their short positions, and do we have a start of a rally or no?
Others to do well too. So you could say, well, maybe the disincentive is great, but I have to believe that it's actually correct, Carl. And the reason I say that is because anecdotally and also.
All right, I'm just going to pull off CNBC here. The other thing to keep in mind is regarding the crypto regulation that we talked about. Very likely that the crypto regulation talk was very good for Bitcoin, was very good for Ethereum, but maybe not so great for some of the altcoins. This is sort of the expectation that the SEC's maybe going to regulate coins as securities, but beyond that, specifically target maybe the altcoins who may not be as legitimate. And I wouldn't be surprised if that's why we're seeing a little bit of a resurgence here in BTC and Ethereum. Usually you see Bitcoin trend down with the 10-year treasury, not immediately intraday, but over time, over weeks and year to date, that has been a relationship that we've seen. 10-year treasury back to 1.527 right now. All right, so this gives you a full breakdown of the big shift at the SEC, or the big shift sort of in the market. What the SEC just said about crypto, why the market is reacting the way it is, what's going on with unemployment. I'll be back for the market open. I gotta make coffee and I don't know, actually get ready. I started way too early. So thank you so much for being here, folks. We'll see you in a bit. All right.